everybody, it's Cole and Jamie Bowling with the Bowling Group at Keller Williams
Hello.
One Legacy Partners in Topeka. Hope everybody is having a wonderful day today. So today we're coming to you with the 5 steps to figure out how much you can get pre-approved for. So we're going to start with number 1. Very simple. We're going to figure out monthly expenses. So what that means is we figure out the car payments, the credit card payments, anything that will report to your credit, right? So if they pull a credit report on you, it's anything that is being reported against you, something you filled out credit app for, i.e., the car payments, credit cards, things like that. They're going to look at that and they're going to call that the debt number, right? So then,
and it's the minimum payment on those payments as well that pulls.
Great point. They basically, so if you like to pay more than $20 a month, what the minimum is, they only take the $20 a month. Number 2.
So keep that in mind when we go into the next steps. Number 2, you're going to look at your gross income. So that's what they're going to combine. You want to make sure you combine, if you're going to have you and your spouse on there, combine all of your income onto this
Pre-tax
calculation. Yes.
Yeah.
For gross monthly income.
So if your employer pays you $50,000 a year, you make $50,000 a year. They don't take into account what the IRS takes out of it. So you'll want to make well aware of that when you're analyzing your amount of money that you're going to spend each month on your property. Mm-hmm. So number 3 is the estimated monthly mortgage cost. So using an online mortgage calculator or ask your real estate professional or mortgage lender to kind of help you with that, then you want to also remember to add in the taxes and insurance, and if there is any homeowners association fees, and then any other monthly or yearly costs associated with owning the house. And what you'll find is you typically want to take that number, and then as we move into number 4, Jamie will explain to you why that's important.
So we're just going to do the math. Like it says, we're going to take your total monthly expenses that you're paying. And this, if you want to figure out what you can get pre-approved for or what you feel comfortable for, if it's what you can get pre-approved for the most, you'll do the minimum payment. If it's what you feel comfortable with, which is what we'd highly suggest you look at, is figuring out how much you're paying on all of your monthly expenses, adding in your estimated monthly mortgage costs, take that total number and divide it by your total gross income for the month. And then that's your debt to income percentage. So if you're FHA, it needs to stay under a 57% DTI, and those can kind of jump around depending on which lender you go through. Same thing with conventional 45 to 50% DTI, of course, depending on your lender. And then the VA, you need to stay under at least a 41% DTI.
Yes. So in simple math, if you're if you guys are making $10,000 a month between you and a spouse, and your expenses are $4,000 a month at minimum payments, you have a 60% ratio, right? So they're going to look at that and you would be fine. But if you have 6,000 in expenses and you make 10,000, you probably might not qualify for maybe a higher price property that you're looking for. So that's really just the simple math of it, is just figuring out exactly where you're comfortable, and then what the government really or the bank will allow you to do. So as I say that and I move into number 5, how much can you get pre-approved for? Well, it's pretty much what we were just talking about, is you want to break down all of your monthly expenses. So you'll take your ones that actually report and ones that don't, right? So that the ones that don't are things like utility costs, your phone bills. Sometimes they report, sometimes they don't. Typically they don't. Food, gas, medical expenses, and then any miscellaneous like shopping you may do or fun stuff that you may do with family. If you budget all of that, you want to make sure that you're not what we call, house rich and pocket poor. Because what we find is people go, oh, well, I can get up to 50% on a payment. So my payment, $5,000 a month. You're like, well, I have $5,000 left over. Well, not necessarily, right? Because you've got
off of your gross and not your net
income. So the government's going to take their 20-some% off, depending upon your tax bracket. And then next thing you know, you're really living in a nice house with no money to pay for anything.
Or do anything fun.
Or have any fun, which is what we feel life is all about. So I'll let Jamie explain.
So the other thing too is whenever we're helping a buyer out, we don't really care how much you spend we want you to be happy. Our main goal is to make sure that you get the house that you love, you're happy with it, and you don't get over your head with finances, because finances can stress you out. It can make you sick. It can cause all sorts of things. So we would much rather you be comfortable in the house that you're buying instead of going with that max budget, because we want you to be comfortable with those payments and be happy in your new home. So,
Absolutely. And we definitely request that you work with a professional mortgage lender, somebody who does exclusive loans and not, just anybody, but somebody who is exclusive to that. And what they're going to do is they're going to do what's called a pre-approval. They're going to run your credit score. They're going to determine, based on what your credit score is, what kind of loan program you can get approved for. Typically it's an FHA or a conventional loan. Conventional loan is backed by the bank. FHA is backed by the government. So you make sure your credit score is above a 640 if you want to have a really good rates. Sometimes they go lower, but that's about what we know is a standard number. And you want to make sure that you always call us first for the recommendations and to get with us, because we're going to be the ones who have relationships with these people, and we're going to protect you, because our whole world revolves around making sure that people are taken care of, they're educated, and they have all the information they can to make the right decision for them and their family. So
we vet them for you too. So, and we have those relationships.
Yep.
We've done deals with them multiple times. We know how they work. So it's not just handing you somebody's name just because, hey, we can give you a name. It's because we actually have done business with them and
yes,
trust them.
she's hitting the nail on the head there. So anything else?
That was it.
All right. Once again, we're Cole and Jamie Bowling with the Bowling Group at Keller Williams One Legacy Partners in Topeka, and we look forward to working with you and hire us to help you buy a house.
Yep. Thank you guys.
See ya.